So anyhow, right time, right place. They get wind of this deal. Initial pricing guidance was 13 million, 44 units, and at 13, it was overpriced based on the current performance of the property. And so they were able to knock this thing down all the way down to $8 million, which is pretty crazy. This thing wasn't shopped with a ton of buyers, and the guidance was 13. So I think a lot of people passed on it, but they were able to go up, meet with the broker. They met with the seller. They even actually did a little due diligence on the seller, found the seller on another podcast, and realized the seller has a special In-N-Out meal that he really likes. And so they actually went to In-N-Out, grabbed the seller his favorite In-N-Out meal, went up there, met with them. Anyways, after a lot of negotiation back and forth, got this thing down at $8 million. And, it wasn't overnight, but this thing came to fruition in the fall. I would say sometime in October, I believe. And finally, back and forth negotiations, got this thing under contract, $8 million. And then 30 days into due diligence, on the last day of DD, which was, I believe it was January, it was the first week of January, hit him with a retrade. And a couple reasons for that. For you guys out there, whenever you're buying a deal, you only want to retrade, meaning renegotiate the purchase price, renegotiate the terms of the deal if there's a reason to do so. So I always say when you find a deal, I always ask the broker ahead of time, early on in the process before I submit an offer, is there any, deferred maintenance or expensive CapEx items that need to be replaced that I should be aware of? And that's your opportunity to say, hey, Rich, the roof needs to be replaced. The HVAC units, 50% of the HVAC units are at the end of their life cycle, or, there's a plumbing issue. All the plumbing needs to be repaired, whatever it might be. Now, if they say, hey, everything's good, as far as we know, okay, great. Well, we're going to submit an offer. We're going to put this thing under LOI based on the information that the broker told us, or the seller. And if we get into due diligence in our physical inspection and we find out, it needs a full roof replacement, which is going to cost $140,000. We need to replace the water heaters on the property. Well, that's a reason to go back and retrade. But on the flip side, if they tell you the roof is bad and you go into due diligence and you find out the roof is bad, well, that's not a reason to go retrade, right? And so reputation is very important in this space. There's not a ton of people doing this. There's only so many brokers out there, right? And so it's a small world. Everyone knows you. And so you don't want to be that investor that's always retrading in nickel and diamond. But in this particular instance, there was a few things that did not come up that popped up in due diligence. One of them was the seller actually owes the city $800,000 in back taxes and TOT taxes over the last decade, which is significant, right? And so that's another thing that we had to hash out. So those are going to be paid out of the proceeds from the sale. And then also the property has about, a decent chunk of repairs and deferred maintenance that was not disclosed up front. But the one good thing that came out of due diligence, because we had only seen like a couple of the rooms up until the inspection, and we went and, looked at literally all 44 of the rooms. Another tip for you guys is whenever you're doing an inspection, I don't care if it's a 300 unit apartment building, these inspectors are going to ask you, hey, do you want to see all the rooms, or do you want to just do a portion of them? If you want to just do a portion, we can get done quicker and we can do it for a discount. But, here's the thing. You got to see what's behind all these units, because, all it takes is a few units. The sellers are going to show you their best units. And, at the end of the day, you're raising investor capital for a lot of these deals. And you want to know that you're being a good custodian of other people's money, but also your own money. So we always look at every single unit. We get into every single unit. We have them inspected inside and out. But what we realize is all 44 of these units have bay views, which is pretty cool. Hit them with the retrade last day. Whenever you guys retrade, if you're going to do it, wait till the last day of due diligence. It gives you a little bit more leverage. You can also leverage, the idea of like, hey, if you accept this, we'll remove contingencies. We can go non-refundable on our deposit. We have our lending lined up, and we can have this thing secured and wrapped up, closed in like 3 weeks. Everyone will get paid. Versus if you do it in the beginning of due diligence, a lot of these sellers, they spent less time with you. They're less invested with you. You're still a long ways from closing and everyone getting paid. And so they're more likely to say no and bring it back to the market, find another buyer. So you always want to wait till the end. Did it, hit them with $1 million retrade. The seller was cool with it. They just wanted another $50,000 in earnest money deposit. So initial earnest money deposit was 200,000, bumped it to 250. Now it's non-refundable. In exchange for going non-refundable in the 250, the seller discounted from 8 to 7. So now we have an asset and an opportunity, which is pretty awesome, to be walking into $3.6 million of instant equity. The appraisal came back as is value, came in at 10.6 million with a stabilized value of 14 million, which is pretty cool. The actual appraiser, this is the first time this ever happened to me. The appraiser actually went to our website after this appraisal and filled out the invest with us form and reached out and wants to invest with us after appraising and seeing how good of a deal we're getting. So that was pretty cool.